Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we are continuing to work with our algorithm which we started last week. This is basically trying to exploit the overbought and oversold scenarios with the help of Williams percentage R, and we are also utilizing the ATR with that. I hope you are well familiar with the functionalities of both of these indicators, and also I hope you haven't really forgotten what we had done in the last week before we took this long weekend. And indeed, in case if you have kind of forgotten, you might want to do a kind of refresher by just going back to the earlier videos. Now, for today's session, before we get started, there is standard disclaimer here. I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. And suppose if you want to use any of it, I would recommend that you do extensive trial runs for many months and maybe even years, and also allow it to run on demo account for sufficient enough time to get a clear idea of the efficacy of the said algorithms. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we start for the day. Let us go back to the chart, what we are trying to achieve. We had completed our buy side and we were simply looking for the sell side. For today's session, when we look for a sell trade, the essential condition would be that now the Williams percentage R indicator on the 10 minutes candle on the 10-minute time frame, it should have been in a oversold scenario, and then we also need just 2 hours back it should have been in a overbought scenario. So that will mean that this is the initial phase of it entering into a bearish tendency from prior inclination on the bullish side. And now we need to compare the Williams percentage R indicator values. For that we are utilizing the shift 3, and then for looking back at 2 hours data we are utilizing the shift 12 on the 10-minute time frame. So we will be comparing these values. We need these shift 3 value to be less than minus 80, and we need the shift 12 value to be more than minus 20. Then we turn our attention to the candle closing levels. So we want the prior candle, the last candle to have closed in green, and the candle prior to the last candle, the penultimate candle, should have closed in red with losses. And then we compare the last candle's closing, and we want to see that the last candle should have actually closed higher than the prior candle's opening level. That means that even during these bearish momentum, some correction has happened, and then it should again turn going down when the price action again turns downward and it starts to fall below certain level. Again we will be resuming the sell side trade, and that it will be with the trend. We are not really trading against the trend, and these overbought or oversold scenarios we are going with that. And whenever it is in the oversold scenario we are looking for sell, not buy. So I hope you are clear on that front. And now for today's session here, I would like to give you some example of where we might have gone in for a fresh trade. Here it doesn't really seem like we might have fulfilled the conditions. Maybe somewhere here it was 2010 GMT. We need the shift 3 value to be less than minus 80. It is not. That means even here the condition wouldn't have been fulfilled. So somewhere here, then we need the 2 hours back value to be above minus 20 to, so not here also. So we will need to kind of assume only, because we will need to test it, and only during the test because of the algorithm's intensive parameter search, we will be really able to pinpoint. Maybe somewhere we will get the situation like that. So here the time is 12 GMT. If we go back 2 hours in time, we indeed have here the oversold, the overbought scenario, and then this is the oversold here, and it is 1140, then 1150. So if we look on this 12, 1, 2, 3. So roughly conditions are looking like that. Here we might have got the required parameter. Now what we will do, we will check the last candle, and it has indeed closed higher than the prior candle's opening level. Then whenever the value starts to fall below this uh, last candle closing levels 30% of the ATR, we are utilizing the ATR of the 10 minutes candles, and we will be multiplying it by 0.3, and we will get the 30% of the ATR, and again the value should start to fall below 30% of the ATR from the last candle's closing level, and then we will sell it, and the target price would be the ATR again. So here the target will come somewhere close to 7 pips, as we have the ATR of around 6.9 pips. So suppose if we sell somewhere close to here, let us assume, then the target will work out close to 1.0918, and I think it is roughly getting there, but we can't be exactly sure. So only during the testing times we will come to see if it worked or not. So that's the idea, whole setup, and let's get back to the work. Now here we had done this standard instrument subscription. We are utilizing the Euro USD as a default instrument. The position amount has been defined at 0, and then we got these Williams percentage R indicators. Here you can see they are defined at 10 minutes, shift 3, shift 12, Williams 13, Williams R13, Williams R14. Then we got the historical candles of 10 minutes each, and then we got the historical candles of 10 seconds each to compare the momentum after all other conditions are fulfilled. We got the ATR on 10 minutes. As I explained to you, we will be utilizing it for placing the order, and then the stop loss and the target level. We will be utilizing a 1:1 ratio, or just little higher than 1:1 to compensate for the spread and the commission. And we defined this 30% of the ATR, and then we did the subtraction or the addition depending on the kind of trade. So we defined this sell entry point and the buy entry point, and we got this order validity time, and the order validity time is I guess around 12 minutes. We have done this calculation based on that. So we will be adding the 1/6 of or 1/5 of 3.6 million. So let me check our defined parameters. Yes, 1/6. So it will be valid for 10 minutes. And then on the buy side, we had done a lot of work. We had almost finished this data. So for the day, it is all about the sell, and then defining the stop loss and the target levels. So we start working on that. First, we will complete the sell side, and then we will define the stop loss and the target level. So we need couple of if blocks at the earliest. We look at the values of the Williams percentage R, and then we will compare it to the prior values. So here we need, on the sale side, the Williams R13 should be below -80. So we define that, and it should be less. So we take this first input less than second input. I hope you understand what I have done and what I have done. Then we go back to us in time and we take Williams R14 and again we compare. As I said, we need its value to be above minus 20, and these are in minus because the scale is inverted. So the next condition is of checking on the candle closing and opening levels. We want it to have the last candle to have closed with gains. So we look at the 10 minutes candle with shift 1 value, and that is candle 18, and then we compare the candle 18's opening and the closing levels. So we go back here, we get the candle 18's data. And we want candle 18's close to be higher than the opening levels, and as I said, it should have been above minus 20. So we take this, we bring in a couple of more if blocks, and then we join the dots. Now candle 18's closing level and the opening level, the close should be greater than the open price. Then we look at the candle value with shift 2, the penultimate candle, and that is candle 19, and it should have closed with losses. That means the candle closing level were lower than the candle opening level. So we look at the candle 19's opening and closing levels and we do the comparison. Here we go, and now candle 19's close and candle 19's open. And now the candle 19's close should be less than the candle 19's open. So here we have done. Now next step is to compare candle 18's closing level with that of candle 19's opening level, as we want candle 18's closing level to be greater than the candle 19's opening level. So we take candle 18's close and then we compare it to candle 18's closing value, and we got candle 19's opening value, and it should be greater so far. So good, we have defined these many conditions. Now we will need to compare the 10 seconds value whenever it will start to cross below the desired point. We will go a fresh trade. Now let us arrange this. We are yet to define the stop loss and the target levels. We will do it just after we are done with designing the last few steps here. So we put these as our first condition, and then we start the flow. Williams percentage R 14 to be greater than minus 20. Let us see, we want it to look symmetric, so we go for 3 if blocks in a row just to make sure it is good looking aesthetically. Alright, so we now are left with 2 defining if blocks, which we'll see whenever the last 10 seconds candle, that is the value starts to fall below the prior candle's closing level, it will place the order on the lower side. So we will be utilizing the stop sell. It is buy stop. We will be utilizing sell stop on the sell side. So let us go back to 10 seconds values. We are going to need 2 if blocks. We have to compare the candle 20 and the candle 21's closing values to that of candle 18's closing value, and whenever it starts to fall we will be placing the order. So here we go. Let us take the candle 21's closing levels, and candle 21's closing levels are candle 21's closing level, and then we take then we compare the candle 21's closing level with that of candle 18's closing level, and it should have been higher, and then the candle 20's closing level, it should be less than the candle 18's closing level. So we take this if block and first input less than the second input. We need it to be greater. First input should be greater than the second input, and now only when the value starts to fall below, we take the candle 20's closing level, and then we compare it to the again candle 18's closing level. So here we go. done. Now is the time to bring in the pending open. So we got the pending open, and it should be less than the last candle's close of 10 minutes. Now we need to use sell stop as our value. The order point would be less than the current value, so we can't really use the sell limit. So let us arrange these two blocks, and we are now approaching the last stage of the algorithm development, where we will just define the stop loss and the target price, and we are, as most of the time, keeping it dynamic. Now the entry point should be sell entry. For that we need to use this earlier calculation which we had done. The default instrument is alright. The trade amount we generally set at 0.1 million. So for that, for the sell side also we will do the same. 0.1 million. The slippage will be of 2 pips. 2 pips is more than good enough. Now comes the question of setting the stop loss and the take profit. These are the two things which we have to finish off, and then our algorithm is almost complete. So we take two calculations expressions, and for that we have to look here. Okay, so we now for the stop loss and the target price we are going to rely on the ATR of the 10 minutes, and as I said, the ratio will be of 1:1. Just little over that can also be helpful, so it will be like 1.1:1. Let us take the ATR value first. So the ATR is line 25, and we are going to need to create two variables now. One is for the type conversion, as we will be utilizing the values in integer, and here these are in double format, so we have to eliminate the decimal points. Let us create a variable for take profit, so it will be TBB, and its value would be 1.1, and we get that. We multiply it and we get the target price. So we also need to multiply it by 10,000 to eliminate 4 decimal points. The execution pips difference, and it will be of 4 decimal points. Okay, so we got this. Now we have to do a1 into a2 into a3, and this will be our take profit. Now comes the turn of defining the stop loss. So for that again we take the ATR value. We don't use any new variable as we are going in for 100% of the ATR, and we bring in this value for the type conversion. So we do a1 into a2. Now this almost looks good. So we take so here we remove this, we create fresh variables of integer type, name will be SL, save it, and we got it. We bring it here, then it will be again new variable of target price TP, and the result of the calculation will be this a1 into a2 into a3. And for stop loss, since we are utilizing it at a fixed value of 10 minutes ATR, we don't need additional variable. a1 into a2 will do fine. And now comes putting the same values on the sell side. So we take this out and we bring in other. So we have this stop loss and the target price. And then comes the question of order validity. We had only defined it for buy side. Now we do the same for the sell side. We arrange all these blocks aesthetically to the extent possible. So we are almost done with the setup. We will do a brief testing, maybe for a minute or two. Many times the audio and the video quality goes down once we start testing. Because of that, the testing can't be done for long enough time. Pardon me. Now we save the file and we export it. Okay, good. Now we export it in Java format to our demo account, and for there we will test it for a couple of minutes. algorithm, we will import it here. Let us reduce the zoom. Now, so this is our algorithm. It is not that long, only 800 lines of Java code. First, we will need to compile it. And the compilation has been successful. And as we were checking on the 10 minutes candle, let us test for this time only. So we will test for starting from May 1 till May 3, or we can even do 30 April and 1st May. So let us test only for 1st May, as we are not really going into too much anything which will take too much time now. So we test it for instrument. Ours is Euro USD. And the day was 1st of May. So we customize the time. 0152 03. Okay. Let's see what kind of results we get. Let me increase the zoom to make it a bit more clear. This is the testing time, and here, as you can see, one trade would have been executed and it is going to end in the loss. So as we had pointed out, this is the place where order would have placed 30% below the prior candle's close, and it doesn't really go on to meet its target. Rather than that, it hits the stop loss on the upper side. So that's it for today's session. We will be back with a fresh trading setup in tomorrow's session. So I would like to thank you all for joining in. Have an excellent time ahead. See you tomorrow. Goodbye.